So everybody keeps asking, what's the rate? But the real question is, can you afford the payment? And does the loan actually fit in your financial strategy? Because I'm going to be honest with you, a low rate does not automatically mean it's the best deal. And a higher rate does not automatically mean it's a bad move. You have to look at the full picture. That's what a lot of people mess up. I mean, that's where a lot of people mess up when it comes to buying a home, refinancing, or using a home equity. Today, we're talking about mortgage education, right? And I want to break down why you can not only look at the interest rate when you're making mortgage decisions, because yes, the rate matters. Not going to say it doesn't, but the payment, the loan structure, the purpose of the loan, your cash flow, and your long-term plan matters too. So we about to hop into this, guys, but I just wanted to preference that really quick. All of the things matter in regards to your mortgage. What's good? It's your favorite businessman, CEO Rico, on Urban CEO Network, where we discuss real plays, real lessons, and real conversations. Make sure you lock in, subscribe, and drop a comment. Now let's jump into today's video. I've seen a number of people get into situations where they think that, oh, just because they have a certain rate, that's the only thing that matters. That is not true. The rate is only one part of the loan. And a lot of people get stuck on the rate. They'll say things like, oh, I don't want to buy because rates are too high, or I don't want to refinance because my current rate is lower. Now listen, just looking at it on paper, I get it, right? Oh, I got a cheap rate or I got a low rate, whatever. I get it. You know, in some situations that makes perfect sense. And in some situations, it does not make sense, right? Nobody wants to feel like they're paying more than they have to. But the interest rate is the only one part of the mortgage. You also got to look at monthly payments, taxes, insurance, mortgage insurance, closing costs, loan terms, cash flow, total debt picture, you know, what problem the loan is solving. I can tell y'all straight up, me being a mortgage professional, being a mortgage banker, you know, just within this industry itself, right? When I have conversations with individuals, and we just gonna stick on the refinancing component. I've spoken with so many consumers where we're having a conversation, we're discussing their mortgage, and I don't like to approach anybody and have conversations strictly on the mortgage itself. I like to look at the overall financial picture. Here's why. I position myself as a financial strategist, right? And being a financial strategist, I look at things completely different. I don't look at just, you know, do you have a low monthly payment and that's it. I look at things far as, let's look at the monthly payment. Let's look at the interest rate. Let's look at the loan product itself. Let's look at the total loan amount. Let's look at, you know, what outside debts do you have? Let's look at if we can eliminate some of those debts by maybe even tapping into some equity. You know, there's a number of different situations that could be going on to where you can actually leverage what you have right now to create a better financial picture for you overall. And a lot of people don't think like that, right? They think only from one, like a linear, right? And even like other LOs, because a lot of you guys know I used to actually train LOs. Now, I'm not necessarily saying I trained them far as, you know, I got them in the industry, trained them up, things like that. No, I'm not saying it like that. But what I am saying is I worked at the largest wholesale lender in the country. Just simply by saying that, a lot of you guys already know who I'm talking about. I worked there, and my entire time there, I literally helped brokers, loan originators, structure deals, make deals work to where they couldn't get it to work at first, but I was the one who went in there, played with the numbers, structured it completely different, and got the deal to work. Talking the DTIs, the front end ratio, the back end ratio, looking at different loan products and making it work. And like, it was a lot of moving parts, and that's some of the things that I did. But, you know, because sometimes, you know, people are so focused on protecting this rate, they ignore the bigger financial issue, right? Remember, that's what we were just talking about. They so focused on this one number. And it's like, but you have multiple other numbers that are moving, and it's variable parts moving, and you so stuck on this one thing because you think, oh, well, this happened in, you know, 2008, or this happened in the past, and I don't want to be stuck there. And guys, I kid y'all not. I have clients where they're so focused on, and mind you, I'm not mad. I'm not necessarily just straight. I'm going to say like I'm upset at them because they only so focused at this. I'm not. But I will look at them and they will come to me and it's like, bro, You literally just refinance last year, pulling cash out. Let's say you pull like 80, 90,000, $120,000 out, right? Of you did a cash out. And typically when you go the cash out route, typically the rates as well as the payments are going to be higher, typically. So if you just did it last year, but now you're saying, oh, it's going to take me 3 years to recoup the closing cost and all like that. Guys, this is something that really drives me nuts, because it's like, wait a minute, you just did all of this last year and now you're coming here. And they may have worked with a different, loan originator, whatever. You're coming back to me now. Not only is the closing cost not coming out of your pocket, not only are you saving on a monthly basis, I done seen savings, the highest I got somebody for our savings was $1,200, and they didn't want it because of some dumbass reason. But it's like, wait a minute, you just did this last year. You're coming back to do it again, and you focus on closing costs. You telling me that if you're saving $200 on your monthly payment, that is $2,400 a month. An entire year that you're saving. That money can go, whether you put it in an investment account, whether I don't recommend nobody as far as like savings accounts, but if you're the type of person that just saves, by all means do you. But inflation will erode all of that. But do you, right? But you saving $2,400 a month in 3 years. What's that? 3 years, you got 48, 60, that's like $7,200. You have $7,200 in 3 years that you could be just stashing away to have real results right now. But you worrying about the recoupment of it later on down the road, when 9 times out of 10, the data already shows and says that the average consumer refinances every like 5 to 7 years. And mind you, I just gave you the example where individuals did a cash out last year, coming back to me this year to do another refinance rate and term, but yet you're talking about closing costs that you don't even want to pay out of pocket because you blew $100,000 last year doing whatever you did. Come on now, we gotta see over here. We have to make things make sense. We have to be strategic thinkers here, because remember, this is the Urban CEO Network, creating executive opportunities. We talk about money and making stuff make sense over here, guys. That's point blank period, right? So you may have a low mortgage rate, but if you're drowning in high interest credit cards, personal loans, or just monthly payments overall, your overall cash flow may still be messed up. And honestly, I didn't see so many situations where no, it ain't no may, it is messed up. So that's why we have to look at the whole situation. Now, number 2, payment matters more than ego. Now, let's be real, right? Some people are emotionally attached to this interest rate, and reasons I have no idea about, but whatever. They'll say, I got a 3% rate. I'm not touching that. When I tell y'all, I've heard that so many freaking times, it's ridiculous. And in general, I understand where they're coming from. But here's the question, right? Is that low rate helping you if other bills are choking your monthly cash flow? Because at the end of the day, I don't care what no rate is. I don't care about none of that. It's about how much money you can actually keep in your pocket. It's about living a better way, like having a better life, lifestyle, life situation overall, right? Now, because your mortgage rate can be low, your actual life can still feel expensive. If you got credit cards at high balances, you got car notes. Listen, I just seen some people that got multiple car notes, personal loans, medical bills, collections, got no emergency savings. They say that the average American right now don't even have enough to cover like a $1,000 emergency. I'm gonna say they don't even have it like a $500 emergency, and like they don't have no breathing room every month. Now, here's the thing: there's so many people that has a ton of equity within their property, right? Now, I get it; you want to pay them a house off and all like that, but it's kind of one of those things where it's like, bro, if you got equity within the property, you can literally take that money and you can just simply move it. Because so many people say things like, why would I want to, extract that money from the property and blah, this and that. But here's one thing you got to think about too. While I understand where you're coming from, if you have a situation that pops up, let's just say 3 months, 6 months, whatever, you could have tapped into, let's just say you could have tapped into $100,000. That doesn't mean that you have to, spend that money. It's just you transitioned it from it being locked into the house to now you have it over here inside of a liquid vehicle, right? To where you can always access it. That does a lot. That does you 10 times better than just having your money sit, because the moment that the industry, not the industry, but the economy flips and changes, I just seen people literally have $40,000 extra in equity but a year has passed and now $40,000 gone. They could have had that money just sitting aside somewhere, right? But whatever. So once again, we gotta look at the full financial picture, right? So a mortgage strategy is not always about like just getting the lowest rate, right? Because sometimes it's about creating a stability. It's about freeing up monthly cash flow. It's about using the equity the right way. And it's also about getting positioned to buy. Like if you ready to like purchase a property or whatever, you got to get in the position to buy it. And that's why if you actually go into the description below right now, you will see I have a link there to my mortgage purchasing guide, like my home buyers guide, where I'm taking you step by step through the entire process on making sure you put yourself in a position to be ready to buy a property, right? Because it's not just about if you just got the down payment or stuff like that. It's so many things that goes into it, and you need to be ready. So guys, if you want that, make sure you go to the description and get that right now, right? Then the goal is not just to have a good looking rate, right? Because even with a credit score, the goal is not to just have, oh, I got an 800 credit score and that's it. It's like, okay, what is it doing for you? Because if it ain't doing nothing for you, it doesn't matter. So the goal overall is to make a smart financial move, right? You have to leverage these things. See, and that's the biggest thing when it comes to individuals that are financially savvy, where they understand the strategies and they're you know what I'm saying, executing on those. And the people that just like, oh no, I'm just gonna stay over here. I'm not gonna do anything, but it looks good over here. Let me put this 800 credit score on the shelf somewhere here. I got an 800 credit score. It's like, okay, bro, what does that mean? Did that make you some money? No. If it didn't, then be quiet. Number 3, buying a home is about readiness, not just rates, man. We just said that, right? So a lot of people, they keep waiting for the perfect time to buy. That's just like, haven't you heard people say like, we're waiting for the perfect time to have a baby? It's never a perfect time. There's something that's always going to come up. You feel what I'm saying? But the perfect time may never be perfect, may never look perfect. Why? Rates may move, home prices may move, inventory changes, your credit changes, income changes, life itself changes. So instead of only asking, are rates low? Ask yourself, is my credit ready? Is my income stable? Do I have money stashed away? Do I understand my payment range? Do I know what I can comfortably afford? Do I have plans after closing? You see how those questions is a breakdown? It's completely different. A lot of people don't even think about these questions, but these are some of the questions that you need to ask yourself before executing on that plan, right? Because buying a home is not just about getting approved. You can get approved. If your DTI look good and on the back end, on the front end, it all makes sense. That don't mean that your overall financial picture can handle what you actually about to transition into. It doesn't mean that. It's about being prepared for sure. Now, you don't want to get into a house and then be house poor. That's like the dumbest shit you can do. But so many people do it. I'm sorry. You already know. CEO Rico has to be real with y'all. I can't lie to you. If you ask me a question, you want me to be 100. I only can be 100, right? So just you don't want to just buy just because somebody told you to either. That would be completely stupid, right? You want to buy when the numbers make sense for your situation. Always remember, like I teach my kids, everything is a business. Numbers is everywhere. It's all you always have to look at the numbers because numbers don't lie. Remember that. They don't lie. Okay. That's the difference between emotional buying and strategic buying. Two completely different things. Make sure you're on the right side. All right. That's just all I'm saying. And number 4. So refinancing is not always about getting a lower rate. Right. I got stories for days on that. Right. and I jump into like a few of those when it comes to that, but just hear me out. Right. So when we're talking about refinancing, right, a lot of people think refinancing only makes sense if they can lower their interest rate. That's the only thing that they think about. Cool, right? But that's not always true. A refinance can be used for different reasons. For example, I got a few of them lined up, ready to rock, right? Lowering the payment, paying off high interest debt, pulling cash out for a purpose. Like if you want to renovate the house because you about to, potentially sell it sometime in the future. Or if you just want to, let's say you want to do like a little one, have a baby or something like that. And you're like, well, I don't have all the capital to do the nursery right now, but I can tap into this. I definitely can afford the uptick when it comes to the new mortgage payment. That's not an issue, especially if you already ran the numbers. Remember, I told you that, right? Remember that. Shortening the loan term, removing someone from the loan. I had too many situations with that. Restructuring monthly cash flow, consolidating debt, or creating a cleaner financial picture. You can have money going here, and you like, bro, this doesn't make sense. You got payments coming out the 2nd, the 1st, the 2nd, the 5th, the 7th, the 14th, 15th, 17th, 20th, 23rd, 25th, 25th, the freaking 27th, 30th, bro, you need a cleaner picture, bro. You need to eliminate all of that and get it to just one set structure. Why? Because if you're not making money on a daily basis, why would you want your bills to constantly come like that? Like that's you every time you look at your phone and see an alert, you get a little scared. You're like, oh man, I only had like $50 until like Friday, but this bill coming tomorrow. And then it's like, but bro, you could have been took care of that and only had 1 or 2 payments, the first or the 15th. Then all your checks could have just been, you know what I'm saying, going to your account, and you'd have more structure and more management to it, right? You got to decrease the chaos when it comes to your financial picture. Okay, so just make sure you stay on top of that. So just once again, so let's be clear, right? I'm not saying everybody should refinance. I am not saying that whatsoever. But what I'm also not saying, what I am saying, I should say, is that I'm not saying you should just give up on a low rate just because, right? What I am saying is that you have to run the numbers, because at the end of the day, the numbers is what, once again, is going to determine what you should and shouldn't do. Because sometimes the question is not, is my mortgage rate going up or down? Sometimes the question is, does this move improve my total monthly situation? That's why strategy matters. Number 5, home equity can be powerful if it's used correctly. Now, this is something that we talked about, especially with the economy, the way it moves and housing market and all like that, right? So a lot of homeowners are sitting on equity, but don't know how to think about it. Equity is not free money, okay? Don't think of it like that. It's not money you should just pull out and waste, because then you get yourself into a more worse situation, right? But it can be a tool if used correctly. You may use equity to do what? Pay off expensive debt. Once you see how it's a repetition on what you should be doing: expensive debt, improve cash flow, invest into a business, make necessary home improvements, create financial breathing room, position yourself for another move. That's what you should be using it for. Use that as your lifeline. Let's stop looking at our okay, real quick look, caveat. Don't look at your house as a asset. That drives me crazy when people say that, because what is an asset? An asset is something that makes you money, right? But what's a liability? Liability costs you money. Well, if you live in your home as your primary residence, you're not making no income off that home, and all you're doing is paying for it on a monthly basis. How is it an asset? It can convert into an asset at some point in time, yes. But as long as you're living in there and you're not making no money on it, it's not an asset. It's a liability. But you can use it as a leveraging tool because it has value. You get what I'm saying? It's collateral. That's one of the reasons that they give you mortgages anyway, because the house itself, they know it's collateral. It's physical. You can touch it. And if they need to take it, they can take it and sell it for a value, right? But the key is this: you need a plan before you touch the equity. You jump out there and do nothing, have a plan. Because if you pull a cash out, pay off, and you pay off the debt and then run those balances back up, you didn't solve the problem. You just moved the problem. I am a financial strategist because, remember, guys, that's why discipline and structure matters. The mortgage is only one part of the strategy. Your behavior after the loan matters too. Once again, this is why when I work with my clients, yes, they know I'm a loan originator, but I work as a loan originator on this side, but I also have my business brokerage on this side. I can help you. I mean, of course, there's certain rules and regulations and all the things you can and can't do on this side. Cool. And I don't violate none of those. You feel what I'm saying? It's clear separation. However, if I'm having a conversation, I'm letting you know all the different things that you can do, what you can do over here, how you can transition it, how you can access the capital, how you don't have to go get funding nowhere else because you have it right in front of you right there. You can tap into that, start a business, do some investments, pay, you know what I'm saying? Invest into I don't give investment advice, no, but I'll just give different ideas. We, like a brainstorm session in a sense, right? Some creative strategies to where when you do acquire it and it's not putting you in a bad situation, it's making you in a better situation. Just doing certain things to where it's like, all right, bet I'm gonna be better off than I was before I made this move, right? So this is also why I always tell people, stop making money decisions off emotions. Right? Like, don't get me wrong, we're all human. We all get emotional. But even for myself, just, working through life, not like working at a job, but just working on myself throughout life, I noticed that okay, I don't, if I make an emotional decision, it could be a life altering decision because of my emotions. And that's something that I had to get in check. Not saying I was ever overly emotional, but it was just something that I think about, Don't put yourself in them situations. Get your emotions under control, okay? Don't just chase the biggest approval. Don't just listen to random people online telling you what to do. You need to know, don't just chase the lowest rate, your numbers, your specific numbers, your specific situation. You need to understand your payment. You need to understand your credit. You need to understand your debt. Super, super big. Understand your debt, man. Understand where your money is going, how your cash flow is moving. You shouldn't be out here just like, oh, I don't know why I don't have any money. I don't even know what I'm spending my money on. All these subscriptions and stuff that you got, get it in check. You need to understand what your overall goals are, okay? Because a mortgage is not just a loan. It's one of the biggest financial tools most people will ever use. And if you use it wrong, it can stress you out. Opportunity. But if you use it correctly, it can help you build stability, leverage, and it also can create wealth for your family if you do it right. Okay. So here's a bonus tip, right? Before you buy, refinance, or use home equity, ask yourself these 5 questions. Okay. What problem am I trying to solve? Will this loan improve my monthly cash flow and financial position? What will my payment look like after taxes, insurance, and all costs? Do I have a plan to avoid creating the same debt problem again? Because if you're going to sit here and pay these credit cards off, you got 30, 40, $50,000 in debt, you pay it off and you run it right back up, especially if you run it up on consumer debt. I'm talking you out here buying dumb shit, brand new shoes, even though you got shoes, brand new car, even though you got a car, brand new appliances, even though there's nothing wrong with your appliances. You literally just put yourself right back in the hole. And when a new opportunity presents itself, you cannot make a move. Does this move help me long term, or does it feel good right now? Because that's the real difference between a regular borrower and a strategic borrower. A regular borrower just asks, can I get approved? A strategic borrower asks, does this move actually makes sense, right? So if you're thinking about buying a home, refinancing, pulling some cash out, or using your home equity, don't just guess. Let's look at the numbers. Let's look at the strategy. Let's look at where you are, where you're trying to go, and what move actually makes sense for your situation. Book a mortgage consultation with me, and let's build a real plan. The link is down below. Make sure you like, subscribe, and share. And I'll see you guys next time. Peace.